Hello, I'm David Mandy, president of O&M Partners in New York. I want to welcome everyone today to the INV Metals Town Hall call. INV trades on the TSX under the symbol INV. For those who are new to these broadcasts, our mission at O&M Partners is to bring the management of public companies and non-deal investors together in real time. The material presented today is already public. We're hoping to bring this information to your attention, provide context, and help you make a better informed investment decision. We want this broadcast to answer all of your questions. Questions will be easily answered by going to the question portal of GoToWebinar or by emailing us. For any questions that remain unanswered, we'll follow up in a timely manner after the call. For those who dialed in, the only way you can hear our pre-recorded introductory presentation by Brian London is on your computer speakers. If that's not possible, you'll be able to hear the main presentation and the Q&A after 15 minutes, so we hope you'll please stay tuned. Before we turn to our host today, Candice Mckibben, the Chief Executive Officer of INV, it's a pleasure to introduce our introductory speaker, Brian London, who's the editor of Gold Newsletter. Brian is a veteran in the mining business and the investment business. His career spans 4 decades. He serves as the president and CEO of Jefferson Financial, a highly regarded producer of investment events, publisher of investment newsletters and special reports. Under the Jefferson Financial umbrella, Mr. London serves as the publisher and editor of Gold Newsletter. The publication has been the cornerstone of precious metals advisory since 1971. He's also the host of the annual New Orleans Investment Conference, which is the oldest and most respected investment event of its kind. So on that note, I'm going to turn the call directly over to Brian.
Hi, David. Thank you. Glad to be with you today. I'd like to give you my thoughts on gold right now and why I'm very confident that we're in a new gold bull market. And one of the things that I think it's important for investors to realize these days and right now, that this gold bull market is not only in effect, but it's coming at us fast and hard. Moving on to the next slide. What I had predicted for the next 5 years is essentially what's happening right now. But instead of 5 years, it all came to pass in not much more, figuratively not much more than 5 days. Now, initially when this happened, when we just saw the first onset of the COVID crisis, when the markets and people around the world really began to realize how serious this was and what the implications were for the global economy, we saw the markets were in turmoil, much like we saw in 2008. We saw massive sell-offs and massive recoveries, but a lot of volatility. Now here in this chart, we look at gold during the 2008 financial crisis, but post when the realization of what was happening was hitting the markets. And here you can see that gold experienced very steep sell-offs, but then it would experience dramatic rebound. The bottom line was this is tremendous volatility, and a lot of people disparage gold and gold's performance during this crisis, but in actuality, it performed its role admirably. Gold is the piggy bank that's broken into in times of crisis. It not only protects you from long-term depreciation of currencies, but it's there in an emergency. It's there in times of extreme concern, anxiety. It's there when you need liquidity. And that's what happened during that immediate aftermath, an immediate wake of the 2008 financial crisis. We saw a lot of investors, a lot of speculators, a lot of hedge funds that held gold needed liquidity. They had margin calls and needed to raise cash. They could sell and needed to sell anything that wasn't nailed down. And so gold was sold off to raise funds, and it did perform its role well. But what I'd like to focus on here is what happens when the markets realize what the policy response is and is going to do. So here we see after the 2008 financial crisis, that initial fear over the first few weeks and even months after the 2008 financial crisis, it shifted into greed as investors saw what was happening, saw the unprecedented measures that the Federal Reserve was taking to rescue the economy and refloated on an ocean of easy money. So fear turned to greed, and then we see this chart of what happened after that initial volatility. Gold more than doubled. In fact, from the lows of around $700 in the midst of that crisis to the peak at over $1,900 in 2011, gold more than tripled in price. And the leveraged investments, the mining stocks, did much better than that. So those people, those investors who were able to buy during the crisis and look ahead, did extremely well. And we're seeing that again. But one of the things that I want to stress, as we see in this next slide, is that a new round of massive stimulus was already baked into the cake and what was brought on by the COVID crisis. The markets needed easier money. They needed more cowbell. They needed the Fed to once again lower rates, and they were going to find some excuse. The coronavirus, as I wrote in the Gold Newsletter, isn't the reason for the next round of currency creation. It's just the excuse. It affects only the timing. Now, it turns out it was a damn good excuse. This is real, but it was going to happen. All of what we're seeing now was going to happen because the markets were going to take a tumble at some point for some reason and demand that the Fed and other central banks act. It happened very early in the year because of the coronavirus. But again, the timing was not only brought forward, the implementation was accelerated. This chart shows the total Fed assets. And as you can see, we had an unwind that ended basically at the end of July in 2019. And the Fed gradually started quantitatively easing once again. But then we see it just went exponential. And the Fed balance sheet is approaching $6.5 trillion right now and on the way to even higher levels. The printing presses, as this chart shows, are rolling again. And just a note, these charts are from thechartstore.com. My friend Ron Grease does these charts and has a wonderful chart blog service that I think everyone should subscribe to. But here we see again, the printing presses are rolling and Fed assets have gone exponential. To put this in some perspective, visualcapitalist.com came out with another one of their great infographics that kind of put this in perspective. We can see that QE4 in just the first week or two after implementation had already exceeded any of the previous levels of quantitative easing. And that dotted line is the projected asset growth based on Bank of America's research. I have a feeling that's going to well exceed that. But even on this fairly conservative projection, QE4 will dwarf the cumulative purchases of all three previous rounds of quantitative easing. So what are the implications of this? The primary implication, the easy implication, is what this is going to do to the deficit and the federal debt. This is a chart that I had been using in my presentations well before any of this happened. And you can see it's a bit out of date, but it shows the federal debt at about 22 trillion. That's most likely going to be closer to 24.5 trillion dollars by the end of this year. But what I want to point out here is the implications of any rise in interest rates when the debt gets this large. As you can see in this chart, the blue line is the federal debt. And after the 2008 financial crisis, of course, because of all the stimulus efforts, quantitative easing, and all of the spending, the federal debt began to soar. But as you can see from the red line, at least after that initial jog up, the interest costs, and that's what the red line represents, is federal government interest expenditures. Interest costs, the cost of servicing that debt, was essentially traded sideways. It didn't really rise because, as you'll remember, the Federal Reserve was lowering interest rates at that point in time. It had zeroed interest rates after a few cuts, and then it went sideways for years. Now, the first Fed rate hike is marked on this chart with that blue arrow. And then the Fed started to raise rates at only a quarter point a year. Very mild, very small hikes in interest rates. Yet, because the debt had grown so large, you can see that the debt service costs, again in red, began to soar. And this is only after a few quarter point rate hikes in the Fed funds rate. The implication here is that if the Federal Reserve, for example, would have reached their goal of a 3% level on the Fed funds rate, the implication on that, for that level of the Fed funds rate, would be debt service costs approaching $1 trillion a year just to service the debt. And my view is that that would be politically impossible, that the American citizens wouldn't put up with it, and we'd get talk about defaulting on that debt. Now, that would be at a Fed funds rate of only about 3%, which is really half of what would have been in normal times considered a normal rate, a normal level for the Fed funds rate. So the implication here is that we can never have normal interest rates. In fact, we can never have, in my view, positive interest rates on an inflation adjusted basis. So real rates will remain negative. And this is enormously bullish for gold, for silver, and for the associated equities. And when you look forward for years and years to come, essentially forever under the current monetary regime, with debt loads like we currently have, we will always have negative real rates. So therefore, the wind will be beneath the wings of gold and silver and mining stocks for years to come, unless there's some sort of a major monetary reset. Now, drilling down briefly to the gold and silver markets, and what I want you to focus on is the lower chart, that orange and black line, which is a 14-week stochastic. You can see, I hope you can see, is that we had a downturn in gold on that stochastic, and then it has reversed and headed back upward. If you look back in the 2004 to 2007 timeframe, you can see that stochastic spent a lot of time around 80 or above, and therefore we had long-term upward momentum in the gold price. This is a momentum indicator. If you look past the 2008 crisis, you see that we had some sharp falls, but that momentum indicator never got really low to around the 20 level. Didn't really bottom, and that we spent a lot of time at 80 or above. What this shows is that gold's upward momentum has maintained and is increasing at this point, and gold wants to go higher. Silver, of course, is much more volatile, and because it has this, I think, unfounded reputation as being largely an industrial metal, it really got taken out to the woodshed in the post-COVID crisis sell-offs, where people are looking at the effects and the implications for the global economy and selling anything that would be attached to an industrial component. But as you may be able to see in this chart, it's headed back up on that stochastic once again. And I really like silver too, because it does offer leverage to gold. My one concern we can see in this next chart, this is a chart of gold versus Fed assets, both rebased to 100 at the end of 2008. So what we see is the relative performance of these two asset classes. If you look at the peak of gold in 2011, gold price being the black line, you can see that it started to decline when the Fed announced Operation Twist. The speculators at that point were hungry and thirsting for another round of quantitative easing. Instead, they got Operation Twist, so gold traded sideways a bit. Then they announced QE3, which was unlimited quantitative easing. Gold peaked then. It actually started falling rather after the announcement of QE3. That's because the speculators looked at the next announcement from the Fed, that being the end of quantitative easing. So gold was predicting this. And then we see the blue line of Fed assets. Fed assets plateaued, then started to decline. But in the midst of that decline, we see the gold price started to rise again. My concern here is that unless we see some real world inflationary implications, inflationary results from this round of quantitative easing, this round of massive monetary stimulus across the board, unless we see some real world effects from this, and that unless we actually see retail price inflation resulting from this time around, then gold will once again peak and then fall off again. The good news is I believe that this level of monetary stimulus pretty much requires that we will have a reaction. We will have some retail price inflation resulting, significant price inflation resulting, and a significant devaluing of the dollar against gold, silver, and associated equities. So I think that we're going to have, I'm very confident we're going to have another major bull run in gold lasting years, 3-5 years, if not more. But this is a concern of mine that this time around, the quantitative easing, the stimulus cannot be captured within the financial markets. It's going to have some real world results on the economy, but I do think we're going to get that this time around. So that concludes my presentation. I have a special offer for listeners, goldnewsletter.com/report. You can get some of my latest picks, top picks in the equities markets. You can find me at goldnewsletter.com, New Orleans Investment Conference, and on Twitter. So please start following me and visit that link at the top for some special discounts and offers. Thank you.
Thanks so much, Brian. That's Brian London, the editor of the Gold Newsletter, which he covers not only resource stocks, but the entire world of investing. Now we'll turn to our host today, Candice Mckibben. Ms. Mckibben is the Chief Executive Officer and Director of INV Metals. She joined INV Metals in March of 2008 as CFO and was appointed Chief Executive Officer in 2015. She has over 25 years of experience in both the mining sector and within capital markets. Ms. Mckibben oversees the technical, strategic, financial, and ESG initiatives of the company, along with their marketing efforts. Ms. Mckibben is also the director of Conic Metals. Regarding her background, she's an alumnus of Deloitte, where she received her CPA. After leaving Deloitte, Ms. Mckibben moved to BMO Capital Markets as a mining research associate covering base metal stocks. And then she went to RBC Capital Markets as a global mining institutional salesperson. It's a real pleasure to have Ms. Mckibben with us today, and I'm going to turn it over to her.
Thank you, David. Okay, I'm going to assume the technology is indeed working. And I want to thank you very much for the introduction and thank Brian for his astute words. Welcome to the first of 3 INV Metals live webinars hosted by O&M Partners. And we're very pleased to be here. We really appreciate your time this afternoon. Certainly, I just want to comment that these are extraordinary times, and a lot of our countries that we work in the mining industry are certainly hit hard, along with Canada and the US. Resource-based economies are going to be hurt with the oil price and that type of thing, and that really does hit home with us, with our communities back home. But it also provides an opportunity for mining to be part of the development solution in these areas as we move forward. So I welcome the opportunity today to speak with you on INV Metals, and I hope we will do a good job of demonstrating the compelling investment thesis for the company moving forward. We're going to be talking about forward-looking statements today, so I do please point you to this slide and caution you to those forward-looking statements. Carrying on, investment highlights for INV Metals. We are developing Ecuador's next large-scale gold mine. I'm just going to try to mute this out of, apologies. There we go. I could see the panel. Okay.
Yep.
Okay. So is that in the middle of the screen?
Excuse me, Candice?
No, we can't see it at all.
Okay.
Yeah,
Perfect.
we can't see it at all. Yep.
I can't see it. You can't see it. We're all set. Sorry about that.
Okay.
Okay. So we're developing Ecuador's next large-scale gold mine. The Loma Larga gold project has copper and silver byproducts, and it is located in Ecuador. I think some of you are familiar with investments in Ecuador. This country is certainly on the radar for investment, for exploration, and for the potential for large-scale deposits to be found and developed. We purchased or acquired the project from IM Gold in 2012. They remain and have been a significant and supportive strategic shareholder with just under 36%. And we welcomed Dundee Precious Metals as a strategic investor in October of last year, and they own just under 20%. The project boasts robust economics, and that was supported by a feasibility study that we recently published. The results were published March 31st, and the study itself was published just a few weeks ago. We were recently recognized as one of the top 10 lowest cost gold projects in the world, and I'll certainly discuss that later on, but there's an opportunity here within Ecuador for low cost, large scale mines to be developed. And as far as the investment and compelling case for investment in the company, the substantial revaluation potential within this development phase that we're in, which I will speak to on the next few slides, is substantial and significant, with gold production targeted for late 2022. And we have significant exploration upside at Loma Larga with our newly discovered Tierras Coloradas gold target also, and with our greenfields exploration projects. Okay, this slide details the curve that we affectionately refer to as the Lassonde curve, as you can see up here. And for investors, when you're looking to invest in a mining stock, you do look to the potential cycle which the stock price will have, and usually follows this general upward downward trend. As you find your discovery in the early exploration years, you get this significant bump in valuation with your stock price. And then you do your technical studies in order to make sure that the project is indeed economic, it is viable, and you go through all your permitting in order to move towards a production and financing decision. Once you have that into development, you've got the second bump, and INV Metals is located here. So there is this potential for a re-rating and revaluation potential. And as you can see, we financed back here $15.6 million Canadian, and we're well funded for the Tierras Coloradas drill program, which is now complete, and our permitting efforts this year. So examples recently of the potential for re-rating, and one that's close to home is a very good example in Lundin Gold. They were very successful in the development, construction, permitting, and recently came on stream with production in the late fall. That was on time, on budget in Ecuador, and was the first large-scale gold mine in the country. And of course, Victoria Gold in Canada achieved production as well last fall. And you can see the NAV potential of the production producers with an average multiple of 0.62 is quite significant when you look at the junior multiple that we are seeing right now, which is 0.8. Now, it is worth noting there is a quite substantial multiple for Lundin Gold with a world-class gold development, with a world-class gold project in Ecuador. So definitely the country is capable of having quite large P/NAV ratios. So that's exciting for the country, and one of the reasons why you'll see that the companies that are operating there and investing there and exploring there are significant. This next slide deals with the orientation of where the projects are located within the country and gives a good idea of the geography. So Quito is the capital of the city. This is the ocean, the Pacific Ocean, the coast. Guayaquil is on the coast. Cuenca is our largest city. Loma Larga project is located here in the red star. The yellow stars are our exploration projects, really throughout the Andes. This is the Andes mountain range here, which you see. Cascabel is Sol Gold's copper porphyry discovery, really put the country on the map as far as elephants with large potential for exploration success. And as I mentioned, Fruta del Norte down here in the southeast, and Mirador, which is Ecuadoriente's large copper project down in that area as well. I know that some of you have seen Lumina and Luminex's projects and are familiar with that, and the Cangueros deposit is here to the southwest. So that gives you an idea. The country itself, it's only about an hour flight from Quito to Cuenca, and then an hour and a half drive to our site. So essentially you can be in Cuenca overnight from Toronto or any major city, and then get to the project early the next day. This slide really details the potential and the underexplored highly prospectivity that Ecuador enjoys at the moment. These are the Andes down here, and look at all of the mines as we go up and down right from Colombia to Chile. Ecuador has an absence, you will see, and of course with Mirador and Fruta del Norte newly plotted here, what we see is a potential. Now, various reasons, either the fact that it's quite lush in Ecuador and it's undercover, and geopolitical reasons mean that it was underexplored, and that was the reason and is the reason why major mining companies have been investing in Ecuador over the past few years. And it has several world-class exploration and development projects underway, of course, which Loma Larga is one of them. This slide just lists the companies which are currently, some of the companies which are currently operating within the country, and also notes the financings, recent financings which have been completed. You will note that some of the lots of the large companies, mining companies are here. BHP, Newcrest Mining. BHP is an investor in SolGold and has their own exploration projects. Newcrest Mining, of course, is a significant investor in Lundin Gold and in SolGold, and also is looking for and in exploring within the country, along with other large Codelco, Grupo Mexico, Fortescue, and joint ventures with Anglo American and BHP. So it's a significant list. We are working together as an industry to promote responsible large-scale mining, and it's certainly exciting times in the country for explorers and for developers. More on the government and the support that the mining industry enjoys. With the current COVID crisis, this economy historically has been dependent upon oil, and diversification will be absolutely required within this current environment for its future role in the economy and for GDP growth. Even prior to this current drop in oil prices, last year the mining industry contributed 43% of direct foreign investment, almost $1 billion US. Mining provides significant upfront investment and also provides a stable base for exports and a tax base. This is important within Ecuador because it's a US dollar-based economy. So there is only those sorts of avenues to actually provide the currency for the country to actually operate. So in the budget to support their recent IMF loans, which total almost $5 billion, the government forecasts mining to grow just this year alone prior to the crisis to 4% of GDP, up in this year, up from, oh no, that's next year, my apologies. Up every day seems like it's the same day. We could already be in 2021. Up from 1.7% in 2017. So the country is committed to oil, committed to mining, committed to its development, and we have seen a significant support from all sectors and all of the president right down to the ministries that we work with, and we work very well with those ministries, and we will continue to do that. And note for the Americans in the room, the virtual room, President Moreno, prior to the restrictions on travel with regards to what's happening now, met with President Trump in February to discuss a potential trade deal, which of course is quite pivotal and key to Ecuador. Okay, so now we'll turn the presentation to the Loma Larga deposit and talk a little bit about the the statistics and the return. So we have Loma Larga boasts robust economics, and as I mentioned, please refer to the press release that we issued on March 31st or the technical study, which is published on our website for more technical details. The project returns an after-tax internal rate of return of 28.3%, a pre-tax NAV of $783 million US, after-tax NAV of almost $450 million, and initial capital of $316 million. And that includes taxes, duties, all of that. That's total capital that we will need to raise. It returns in both low cash costs of almost $560 per ounce, all-in sustaining costs of $723 per ounce, with a 12-year mine life and just over 200,000 gold equivalent ounces of annual life of mine production. The project is predominantly gold. 85% of the revenue is gold and 15% is pretty much evenly split between copper and silver. We will be selling a concentrate, which is why we report in gold equivalent ounces. So the project has a high return, a low operating costs, low capital costs, and a straightforward environmentally responsible design. Now, this is a schematic of the deposit. It is flat lying. It's a high sulfidation deposit. This is the actual geometry of the deposit. What you see of those boxes are the stopes. We will ramp from over here, just outside of the screen, about 1.2 kilometers right into the middle of the deposit. You'll see it's only 125 meters below surface, as I mentioned. Very good ground conditions, very good water conditions. We will not have to use any more water than we are using currently in the exploration phase. So with regards to environmentally responsible design, we are doing filtered tails, which means 55% of our product at the end, which is not ore, will go back underground and fill these stopes. The remaining will be pressed, which the water then comes back to the process facility and is recycled. And we won't have to use cyanide in our production, in our process plant, because we will be shipping concentrate. So there are many, many things in the design of this project which were specifically done for that environmentally responsible design, which of course is the goal of any mining company moving forward with permitting these in these days. Our high grade reserve is 2.6 million ounces gold equivalent at 5.7 grams per ton, and that includes 2.2 million ounces of gold at 4.91 grams per ton. These are a few pictures of our deposit, and as I mentioned, this is the first of three. Next webinar, we will have a video, a flyover of what we plan to do in our development plans. This is the deposit location. There are no people nearby. The closest community is about 10 kilometers, so we won't have to have a camp, but we will have a good source of employment. The rehabilitation in this area is quite easy, which is fantastic for rehabilitation after the mine is closed. Other than this drill collar, you can't tell that a drill platform was here just months ago. This is the portal location. What we'll do is we'll ramp into the hill and then go down around, and the tailings facility is also in this area here where we've got the plateau. A little bit about the project milestone in our timeline. Right now we are working on the environmental impact study. We expect that to be complete this quarter. The only thing as far as the impact of COVID-19 and the shutdown, Ecuador is currently in a shutdown. The coastal area is impacted more so than certainly where we are located. As you saw in the picture of Ecuador, the coast is quite far, and not far from a geographic, but far from with regards to going down the Andes and from Quito itself and from Cuenca. And most of the cases of COVID-19 are at the coast, and they currently are getting the situation under control and working to do that. There are travel restrictions in the country, so people cannot go freely between cities. They must stay home. It will continue and move towards a traffic light system, so areas that are less hit will move to yellow and eventually move to green as we progress through this. So we are not working in the field at the moment, but we are focusing our desktop study. The environmental impact study is done in conjunction with local consultants, and we've been moving forward with that. And we will work with the government, the Ministry of Environment, and the Ministry of Energy and Non-Renewable Resources, and the Vice Minister and Fernando Benalcázar to work together to move this project towards development. Project financing and permit process for the year. We have had discussions. We will continue those discussions. And of course, we really look forward to the permit process as we move forward with consultation. Then we've got mining, engineering, procurement, portal and ramp construction, process plant construction, which will take about 18 months. And then we aim to have production, first commissioning, the end of 2022, and shipping our concentrate out to the smelters. So our news flow and our next steps will be to submit that EIS to the ministry, the communication and consultation programs with all of our stakeholders, not only with our local communities, but with the federal government, provincial governments, local cities, and that type of thing, with all our stakeholders, project financing discussions, and we'll evaluate the results of the TRS Colorados gold target and look to have next steps on that. We have a proven team of mine building and financing professionals to drive the project forward. There are details of management and the board in the appendix to the presentation, which is available online. Permitting focus this year, our efforts are being led by Mark Thorpe, who has decades of experience and very, very relevant experience with regards to permitting and the construction and completion of environmental impact studies. Fluent in Spanish, most recently worked with Torex Resources in Mexico and as a consultant. There is a defined permit process within Ecuador. We are currently preparing, as I mentioned, the EIS with our local Ecuadorian consultants, and we have a commitment to provide honest, transparent, and open communication with all our stakeholders. I'm not going to go through this in detail, but this is the process. It illustrates that there is a defined process and timelines associated with each of these processes. We are here in this, and then we will go to a back and forth with the environmental ministry on the methodology that we've used. We have worked with local universities. We have worked with local consultants in order to ensure that our information is complete, is sound, and really we've worked for almost 15 years with the collection of certain data points. So we've got great information with regards to this project as we move ahead. Just a note here, Loma Larga is one of 5 strategic projects previously identified by the Ecuador government, 3 of which have been into development. And so we really are the next phase of the projects which were ready for development. And as we move forward and we look to permitting, we expect to have certainly a lot of focus on our project as we move forward. ESG certainly is not only expected, but is a requirement for investors like yourselves and for the governments and local communities that we work in. Pictures tell 1,000 words. These are just a few of the programs that we run. We focus and they're designed with the governments of our local communities and the participants. We only run programs that are expected and advised by those participants, and it's really focused on generating income and for the families surrounding Loma Larga. Just in the interest of time, we didn't include all of the environmental work that we did here, as well as a nursery. We've got over 50,000 plants, my apologies, indigenous at our local nursery. And we work to do training programs in animal husbandry and in lots of crop yields as far as agriculture goes with the local programs. We've got 2 local drop-in centers. We've been in those areas for over 15 years and we maintain a very strong presence. Now, what we're doing for the response to the crisis that we see now with lockdown is we're working with our local governments and we're providing assistance that is most required. And that's in the form of food basket, medical and protective equipment, and hand sanitizer, and any other types of programs that are of interest in the next little while. One of the things we'd like to do is, over this period, is to move to training opportunities where food and farming becomes a way in order to generate food for those the vulnerable people within the communities that are impacted, so that they're able to grow their own food if this does last any longer than the next few months. So we're working in conjunction with that, and we'll continue to do so and to support our local communities as we move forward. A little bit about the exploration potential of the company before we wrap it up and we move on to questions. So as you saw, the yellow stars are our greenfield properties. We have a close-ology play to Cascabel up here, which is a copper porphyry target, a large copper porphyry. What we're hoping and expecting is more hoping, because it's very early days. When we do some exploration work that is geophysics or of the sort, that we will find that the trend goes north-south. And we have indications that is indeed the case. La Rebuscada and Tierras Coloradas are gold targets, a traditional low sulfidation system rather than the high sulfidation that Loma Larga is. And Tierras Coloradas is the new discovery, which we drilled 12 holes in. And I believe we have a slide that's upcoming next, which I will get into. Just, I'd like to mention as well that at Loma Larga, the deposit remains open. There is very good potential for satellite deposits. We have an alteration package, which is world-class, which is 12 kilometers, and there's strong evidence of a potential for a porphyry to the north. So that does remain open. It's one of the reasons why we acquired the project when we did. Oh, I don't have it's in the appendix, the details of the Tierras Coloradas, but in the 10 holes of 12 that were returned, we hit the vein in all of those. We're very excited about the discovery. We confirmed that it was mineralized, and with a highlight of almost 11 grams over 1.5 meters in the hole. So in those holes, we've got lots of a significant number of high-grade rock chip samples at surface. So what we'll be doing over the next month or so is really looking at those results and looking to vector into the high-grade portion and deciding what our next steps is on that. But that just highlights the prospectivity of the country and the opportunity for really good greenfields exploration, where you take a property from literally no results to mapping, sampling, and drilling, and confirmation of a mineralized system. So in summary, I mentioned that IAMGOLD is a strategic shareholder at just shy of 36% and Dundee at 20%. Management insiders do own a significant portion of the company at 14%, and institutionals as well. We certainly will look to, over the next while, as we move forward to development, to develop a retail following in a retail network. And of course, this is one of our initiatives to do so. You'll note that our analyst coverage, we have 4 currently with buy ratings, and you can see those on the side. And we're pleased to report that this general decrease due to the COVID has been nicely fended off by our announcement of our economic feasibility study and our Tierras Coloradas results. So in summary, we think that there's a compelling reason for investment into the company, and we will be very focused this year on our permitting efforts, our financing efforts, and working together with our local stakeholders, our national stakeholders, and our shareholders in order to move the project forward and be the next development success story within Ecuador. Okay, David, back over to you. Thank you for the time.
Thank you, Candice. Very well told, very nicely presented. We're going to start with Paul Harris. Paul, do you have a question today for Candice?
Oh, hi, can you hear me?
You can do it, Paul.
Hi, Candice, how's things? Thanks for the presentation. I'd like to get a better idea, if I can, about, you said the sort of the process for financing the project is, you've started looking at that. What are you thinking in terms of debt, equity, possible streams or takeoff agreements or that kind of thing? How do you envisage the financial structure?
Sure, Paul. So our plan is still the same at this point. So we were looking to do all of the above, whatever is available in order to move the project forward. So we've got $315 million of initial capital, And we have, if 150 is available for conventional debt, that's 50%, thereabouts. We also have the byproduct credits, the copper and silver, which if we do stream those, it's only, as I mentioned, 15% of the revenue. We could get upwards of $100 million US towards the initial capital, and that would increase our costs to the 750, 760 range, and that's still a very reasonable and low cost producer. So that's definitely an opportunity. And then of course we do have strategic shareholders, which we hope are supportive as we move forward, and then the rest could be equity. Now that is a plan at this point, a potential plan. It certainly isn't in reality, but it is how we're going to be moving forward with our discussions. And if other financing opportunities are available or alternatives, we definitely will consider them. And on the offtakes, those discussions will also start in earnest now as we move the project through for permitting. So we did, as part of the feasibility study, send samples to smelters, and we'll then engage those smelters with regards to possibly visiting. Was in the plan, but that will be probably later in the fall, and those discussions will start.
Okay, and is the idea to be able to announce that as and when you can announce the successful permitting? I mean, that companies often try to do that. So would you like to, is that the goal there?
Well, we certainly would like to do that, and or sooner, subject to the receipt of permits. So,
okay.
Right, if we can secure financing subject to the receipt of the permits, then that certainly would be helpful and favorable for us.
Okay, thank you very much.
Thanks, Paul.
Thank you, Paul. We're going to turn now to Nino Scalamandres. Do you have a question today, Nino?
Ali, can you unmute him? I'm having a little problem getting the unmute to work. Thank you.
I have to step off the call, I'm sorry.
Welcome, Nino. Do you have a question or you have to step off?
I gotta step off, I'm sorry.
That's not a problem. We'll turn to Michael Potter.
Hi,
Ali,
Candice. Thanks very much for the presentation. Can you give us any idea about how much potential you think there is for finding more of that high-grade material at depth underneath the existing deposit?
Sure. Thanks for the question. Let me just go to the exploration slide. Sorry, guys, I'll just get to it. Okay. Can you see that page 26 now, Michael?
Yep, it's clear.
Oh, okay, perfect.
No, I've got...
You know, it probably just delayed. But in any case, I will speak to it, and then we'll, if it may come up, hopefully it will. So what I'm looking at is a plan view of the deposit itself. And this is the resource. Now, we had this is the ramp. Now, this is the resource is 3.6 million ounces. So the reserve is 2.6 million gold equivalent ounces. The resource at this point is 3.3 contained gold ounces at 4.36, just to give you that, because I didn't mention that previously. And we did an exploration program here as a result of a hole that we hit the ore grade cutoff, ore grade mineralization. Our cutoff grade is 2 grams, even though our reserve head grade is 5 grams. We hit 20 meters of 2 grams here in these holes. So we did this Western Extension exploration project, and we hit 5-gram material here in these red dots, and that scale is 200 meters from here to here. You can see 200 meters is from here to here. So there's a considerable potential here to the west. And also, these types of systems tend to cluster. And because it's a high sulfidation, we've got 12 kilometers of alteration package. And just before I move on to the next slide, which details that, our VP of exploration went through the deposit when Darren came from Barrick, And just using where the drill did not cut off the deposit, if we go out, if we step out 50 meters and we assume that we still meet 2 grams or higher, we could potentially increase the resource by 20%. Now that is not NI 341 compliant. That's just an understanding of the potential for where the deposit isn't closed off, and the potential to the west, there's potential to the north, and then down in the south, there's potential for quite silver rich. And then maybe as we move away and further to the south, more gold rich. Now to talk about your potential at depth, this system is fed by quite high grade feeder zones. So there is potential at depth to find more of these, because it's only 125 meters, more of these types of alteration where there's silica, more of these deposits. And of course, if we can find those high grade shoots, then we would certainly follow that down and mine those high grade shoots. So something we could definitely do when we're in mining, and we could do that exploration to further at depth. And just to give you an idea of the alteration on, we take it out. That's okay. Well, the alteration package, it's on our website. When you blow it out, all you see is the alteration for the 2 kilometers. And we had an analysis done of the targets, and there's 9 targets in the area ranked by the potential and where we should go to first for exploration.
Okay, thanks a lot.
Thank you.
Thank you for your question, Michael. We're going to turn to Jeff Masseri. Jeffrey.
Hi.
Jeff.
Great presentation. Thank you. I have some financial questions. First of all, what discount rate did you use for NAV and for IRR?
We used 5%, David.
5. Okay. Thank you. What cash do you have on the balance sheet?
We had 13.6 million at the end of December. And so we have clearly less than that now. I would say, well, I won't hesitate to guess, but a few million less than that. And so we're well funded for this year to take us through to the permitting objective.
Through the project, through the permitting, you're saying?
Through the permitting, yeah.
Yes. Okay, what is your current burn?
Our budget for this year, our current burn is probably, David, I'll have to get back to you on that, to be honest. With COVID and all of these things that are going on, it's hard to say what our burn rate is at this point, because we are slowing things down from a expiration type of thing. So I'll provide that to David, and he can pass that along. Okay.
Thank you. Well, those grades are really impressive, and I think you've got a great project here. So thank you very much.
Thank you. I appreciate that, David, a lot.
Thank you so much, Jeff. We're going to turn.
Sorry. I'm sorry, Jeff.
That's okay. It's okay. Charlie Paradise. Charlie is in our audience, but he always has great questions. Charlie, do you have a question today? We're unmuting Charlie. Just give us a second.
No problem.
Can you hear us now, Charles? Charlie, can you hear us?
Oh, sorry about that.
No problem. Do you have a question?
Well, the situation in Ecuador is a little complicated. It's been receiving some loans from China, and Ecuador is somewhat being seen as very involved, in Chinese loans. And I just wondered, there's a picture on the presentation of Clinton meeting with the president of Ecuador, and I wondered, do you think that the situation in Ecuador as a whole is is dependable, or do you think that there's, possibly a divergence and them becoming involved with the Chinese economics and, whether, is this possible that this would affect business going forward? Thank you.
Thanks, Charlie. My apologies, I won't call you David. I think definitely that the economy of the country in Ecuador is going to be hard hit by this current crisis. So last year or the year before, they were definitely in talks quite significantly with the IMF to provide loans. The IMF and World Bank did provide those loans, and there are very specific guidelines as to the drawdown of those and a plan, very specific plan for the repayment of the debt. At which point mining was a pillar in those plans in order to get the foreign investment in, because it's US-based economy, US dollar-based economy, and to provide the growth, the GDP growth, and the tax base in order to pay those. This, because it's an oil-based economy, oil dependent, and the Chinese oil dependence was really where that comes from. The sale of oil into the Chinese market is a concern with this economy moving forward. So right now, the economy is very fragile, and the benefit, so the IMF and World Bank are working with them, and the bondholders are working with them for interest forgiveness, interest delay on the bonds, those types of things. So the government is very active right now in fiscal measures and in negotiating with its debt holders. The opportunity now for the mining sector is that government will have to be very supportive, because mining is really a key, significant, consistent provider of exports and of tax base. So not only the $300 million initial investment, whatever that may be within the country, but also the employment, the revenues on taxes, the employment taxes, and then the exports. So as far as the net balance of trade goes, mining is a positive to that. So it remains to be seen what happens with the economy in general. I agree the situation is complex. I think it will continue to be definitely complex in the near term, and hopefully they'll be able to negotiate where something in this crisis is a bit of a relief for them as they get back on track. And I'm sure they're not alone as far as the developing countries, considering the measures that Canada and the US alone are taking on with their provision of subsidies to businesses and individuals. I think we're all going to be in for an interesting monetary policy debate in the near term.
Thanks, Candice. Well handled.
Thank you.
We're going to turn now to Fabian Arsman. Fabian, do you have a question for Candice today? Fabian had asked to ask a question. We'll come back to him and go to Doug Loud. Doug, question today, Doug.
Question. Jeffrey, of course, stole my thunder with how much cash do you have. So you're happily wandering along with your EIS and getting your permits provided by a government that is theoretically in your favor. But how long do you think it's really going to take to get the permits? I mean, sometimes we note there are no mining projects, only permitting projects.
Oh, I agree. I mean, the key success of any project in this phase is definitely the permitting. So there have been 2 major mines permitted in Fruta del Norte and in Mirador. So there is a definitive project process. And it is about 8 to 9 months prescribed. So given the recent comments from the government in the fact that mining is going to be part of the relief effort and the recovery from COVID-19 and the crisis in the oil price. I mean, when you're an oil-based economy and oil goes below zero, I can't even imagine being at that table, frankly. So it's going to be a pillar of it's going to have continued support. So we will work with the ministries, and the Ministry of Environment is quite important in that. The Ministry of Mines and Energy and Natural Non-Renewable Resources and the Vice Minister of Mines is a pivotal stakeholder for us, as well as the Vice President and President. And so we'll continue to do that. So there is a process that's well defined. 8 to 9 months COVID will be everything is shut down. So I think that there's definitely going to be a focus on those projects that are nearer term. We are the next in the permit line to really accelerate, because we could be, if we receive those permits, shovel ready by second quarter of next year. So that means that's a significant uptick in the investment within the country. Having said that, they are subject to all the same issues and constraints that we have in resources and in movement right now because of COVID. So we'll work together. Right now, Zoom and everything is working. Government is working, and so we just have to get a focus back on the project and get into the field to do a few more things, and then we'll continue on the process. And one of the things I will say at this point is we're really looking forward to having that consistent and open dialogue with the communities in order to share our story. So we're going to be very active on social media. We're going to be very active in media in general in order to really tell our story, because as far as mines go and as far as social commitment goes and our focus on ESG, we really are and wish to be first in class. And so we'll continue to do that. We focus on that. It's our reason of being and has been, and we look forward to really telling that story. So it's possible 2 mines came on stream late last fall. So the government and the people, more importantly, the people are recognizing this is real. GDP increased exponentially in the provinces where Fruta del Norte and Mirador are. So it really is an economic benefit and a real boost to the local economy, which everyone is going to need at this point.
Two little questions. You mentioned that the vice president and the minister of mines are stakeholders. Are they also shareholders, or you just mean they're interested people?
Yeah, I just mean they're interested. I mean, they're partners. Let's put it that way. I think it's a fair state. I consider, rightly or wrongly, that the governments of where we're working are almost our largest stakeholder, because with the tax revenues that they get and the permits that they must issue and the political environment which they operate in, it behooves you to treat them as partners, I guess, right? And as a stakeholder and not as sort of a checklist. So
you mentioned that the World Bank, I have a passing, shall we say, familiarity with the World Bank. You mentioned, are they financing actual projects, or are they just giving the country money? Usually they try to finance something by lending the country money.
Yeah, loans, direct loans, yeah.
But for a specific project like yours, or some?
No, not for the mining industry, just for general operations.
And last but not least, just because of where I come from, when you're dealing with these ministries, do any of them, shall we say, lean on you and request that you be a little more cooperative?
Actually, I can put my hand on my heart and say no. So whether that's just I can only speak to our experience within the country, but the ministers that we've dealt with have been very, very upfront, very professional, and we have always been on the right side of all of that. Basically, if anything happens in the country, the rules are I go to jail and board and all of the risk associated with that. And that is just not somewhere we want to be. But I can honestly say that the government ministries that we were working with have been nothing but professional, nothing but above board, and we assume will continue to be that way.
Okay, thank you very much. It's very interesting.
You're welcome. Thank you.
Thanks, Doug. We're going to turn to Chesley Morton. Chesley always has good questions. Chesley.
Thank you, David. And by the way, that's a great introductory presentation.
Thank you.
Number of countries in South America in the past have had their issues with insurgencies like the Shining Path or the FARC. And in Central America, pesky NGOs have done a great job of agitating the indigeni. So what sort of things are taking place in your area? Is it all sweetness and light?
I wish I could say yes. very much sweetness and light. No, look, this is a jurisdiction which did not have large scale mining prior to last year as far as production. So the mining opposition within Ecuador is generally political and ideological. There are a few Canadian NGOs which, for whatever reason, are active on various projects. We do have a provincial premier who is anti-mining and wishes to use that as a platform. He tried last year to use the system similar to Colombia with referendums to be anti-mining in various jurisdictions and in our province, along with others who tried to use that up in near SolGold's area, and they were unsuccessful. The Constitutional Court deemed that we have valid rights to our concessions and that we have constitutional rights that remain, and that any and all, what's it called, right that the people have to referendums is what we call them, are only specific to rights that they may have. So we will continue to, I'm sure, have opposition within the country in a political nature. We work in order to combat that. We will, over the next little while, ensure that our communities are very, very well informed. But more importantly than that, because our communities that we've worked with forever. We have 2 community houses within those. So that sharing and that trust is there. But more regionally, with regards to our communication efforts as we move out. So as I mentioned before, social media advertising, what's it called? Instagram, not Instagram, YouTube, Facebook, Instagram to a certain extent, but it's not a usual communication effort within Ecuador. All of those things to get our message out. And then as we move forward, a different message moving it. So who are we? What is our core being? And what then are we going to be doing? And really has to be focused on the benefits for the local areas. So for instance, Cuenca is close by. We absolutely need to tell the people of Cuenca what the benefits are for that. So the steel that might be made there, the trucks which might be purchased there, all of those types of things, the uniforms and all of those things that can't be done in our local area. Clearly, we want to employ people from our local area first, but those larger things, those larger trades, that type of thing can be a really big benefit for those. And so the business community in general in Ecuador is very supportive of mining. Government is very supportive of mining, but there's an indigenous and an we call them anti-miners as opposed to environmentalists because it is quite political. We'll continue to be there, and we have to, as an industry, then work together to teach the people and ourselves to a certain extent, because we need to get better at telling the story, what responsible mining is and how we're going to do it. And so we've really worked together, the companies that are operating there, not very unlike any place that you've seen. The CEOs do talk to each other, and we do communicate, and we do have plans, and we make them together, and we participate, and we fund programs, etc., together in order to really make mining a success in the country. And as we do so, of course, the opposition gets louder. But if we do that and we do it right, then we're reaching the general population, and we're reaching them with a consistent and a positive message.
It's comforting to hear you're on the case. Meanwhile, the technicals and fundamentals look very promising. Thank you very much.
Thank you.
Thank you, Chesley. We're going to turn to Scott Edmonds for questions from our audience. Scott?
Yeah, I did want to say that Fabian was able to chat in his question, so I will read that out loud right now. And it is, why is the valuation for a 5 million ounce deposit so low? What catalyst is needed to change that?
It's a good question. I mean, really, the issue within Ecuador is, I believe, permitting. So if we are, and we had as I mentioned, a prefect, a provincial, more like a governor, who is anti-miner. Now, all of the permits are done at the federal level, the environmental permit, the mining contract, that type of thing, the investment protection agreement, which we're under discussion right now with, which is very defined as well. And we've negotiated our mining contract with the previous government, or under the federal government. So as we move forward, I think the biggest catalyst to de-risking and the valuation is going to be the permit process and moving that through, and of course de-risking it from a financial perspective, so our financing package. So those two catalysts will be really key to unlocking the value and moving that 0.8 price to NAV through to our more comparable development or producer, junior, mid-tier producer or junior producer as we move forward. Now, what I will say is that there's certainly strategic companies, and Dundee Precious Metals is a good example, which are very much supportive of our efforts and the project in general. And so the markets for juniors these days are very tough, and we recognize that strategic shareholders are in the form of corporates are going to be very important. And so that certainly will be a focus for our very key partners of IAMGOLD and Dundee Precious Metals as they help us move the project forward.
Thank you. I did want to say that we got a lot of questions written in by the audience, which is great. A great majority of them have been already answered, but we will send all questions to management so that they have them and can follow up with anyone who needs it. I have two remaining questions that were sent in that I don't think have been answered. And one is the USD $316 million CapEx too big? Have you considered a smaller 100,000 ounce per year project?
Interesting. We don't think it's too big. We think it's the right size for the project, and there's a few different reasons for that. One, you still need a process plant. You still need to develop the underground infrastructure. So the higher your production rate, the lower your initial development capital is spread out against those assets. So we did do a study back in 2016, which contemplated a 1,000 ton per day operation, and the economics, because you still have the capital with regards to a paste plant, albeit it's a little bit smaller, but the order of magnitude on the scale you get from a larger operation is much better. So the 316 we think is quite reasonable, and certainly in the context of, if you compare it to Fruta del Norte, which was almost $1 billion capital and has a similar production rate, 35 tons per day, our capital is significantly lower. We don't have to have a camp. We don't have the back end on the process plant. There are very key reasons why Fruta del Norte had that capital, but as far as the production rate, we think the capital is in line, and we anticipate, with the question that we got earlier about the exploration potential, that the potential for us to go to 4,500 tons per day or 6,000 tons per day and indeed get that added return is there if we are successful on those exploration efforts.
Thank you. And the final one that I have is from Brandon of BMO Capital Markets. How much more surface prospecting remains to be done at Tierras Coloradas to see how many more vein systems could be uncovered?
Brandon has a good question. I mean, we can certainly do that over the next while. What our plan was at this point was, because we had done the initial rock chip sampling, and because these types of quartz veins are easily drilled, and the benefits to doing so to confirm that the mineralization was there, we will get back into the field and we will look to that and see the extensive, to see if we can find, if we can see them at surface, and to see if we can go to the east over there, which isn't on the screen anymore, but, and see if we can, especially with that 2-to-1 vein, that new discovery highlights that the system could be extensive, and with the directionality of that vein being north-south and most of the other ones being east-west, it could be a very interesting system. So we do need to get back out there and do more surface sampling and more mapping to understand if it could be extensive. So we don't know how much at this point. I can't answer that, but I can say it certainly will be part of the program.
Thank you.
Thank you, Scott. We've answered all of our questions. This has been very informative. Candice, I'm going to turn the call back to you for closing remarks.
Well, thank you. Well, I appreciate your time, and I truly appreciate the questions, and I look forward to the next few webinars, at which point we will expand on our permitting plans, and we will expand on our Tierras Coloradas, and we will we'll keep updating and providing more information on Loma Larga. And I just want to highlight that we believe that this is a definitely a compelling investment thesis. And we will work and do our best to continue to be a good corporate citizen within Ecuador and to be a driver of the GDP growth come 2022 when we start come the end of 22 and full in 2023 when we aim to have production. So we really look forward to that, and our team is very passionate about that. We've been working a long time, and we're ready to do this, and we really look forward to start communicating the benefits of this project.
Thank you, Candice.
Thank you, David.
And I want to thank everyone for your attendance today, and it's been greatly appreciated, and we'll be following up with you. Thanks so much. Have a pleasant afternoon.
Thank you, you too.